What is the response in markets if the GOP does manage to pass a bill by Wednesday next week, as we just heard is the most likely, and the president does sign off on it?
I'd say from an FX standpoint, a lot of this is already priced in. The FX market's really been responding to U.S. fiscal, U.S. tax policy for at least 6 weeks now, maybe not at least a month. So I think what we've seen is this is a buy the rumor, sell the fact. The U.S. dollar, I think what we've got from this week is we got weak CPI, and we also got a Fed that sounded pretty dovish. They're focused a bit more on the inflation downgrade and the response that we've seen on the inflation side in the U.S. But what we got from the Federal Reserve is that they're expecting a positive impulse to come from growth from fiscal. But I don't think that's really going to translate into much dollar strength. So unless you get a Fed that's going to tighten maybe more than 2 or 3 times next year as a function of potential fiscal stimulus, it's not really noteworthy, I think, at this point for the U.S. dollar to trade anymore on the U.S. Fiscal theme.
But it seems like the U.S. dollar, Mark, does wind up trading with Trump's approval rating. Here's a pretty cool chart for you, and it tracks just that. If you take a look at the Bloomberg dollar index is the blue line, and you wind up having the white line is the Real Clear Politics Trump approval poll. In theory, they tend to move with each other, at least directionally, even if not line for line.
That's a fascinating chart.
And what we see here is the dollar index is holding up, but the approval rating is tanking to like 37. What do you make of the gap? How does that resolve?
Yeah, I think it could be one of those, this is a correlation, not a causation. I think part of it is we have a very limited time series. We only have about a year's worth of data. For people like us that tend to focus a lot on time series analysis, it takes, we'd like to see a longer term trend to actually have a defining factor there. But I guess one of the points we'd look at is, with the approval ratings, I think that was maybe a proxy for whether or not they could get fiscal through. And so even though Trump's approval ratings are falling, the dollar has strengthened a little bit, potentially off of the fact that the U.S. curve, 2-year rate has moved up. We've seen a little bit of an uptick in growth expectations for the U.S. For next year. And so I think that correlation is something that will probably break down, especially as we move into midterms next year. If the approval ratings continue to move lower, and we do see potential for a shift in the Congress or the Senate, we could see a regime shift in that correlation, where I think another thing you probably want to look at is the partisan conflict index. That has a very tight correlation with the U.S. dollar as well, longer term time series. But usually when there's a partisan conflict across both parties in the United States, the dollar tends to underperform. And I would put this against a backdrop of a global reflation trade that, again, continues to favor more upside in emerging markets and G10 currencies, non-dollar related. And essentially, I think if we do see more kind of uncertainty around U.S. Fiscal, U.S. government policy next year, that is going to be another kind of headwind for the dollar.